What is currently happening in the economic landscape? As of June 2024, the U.S. inflation rate stands at 3.36%, down from its peak of 9.06% in June 2022. So, how can you prepare for these changes, and what are the most strategic moves to make? An economic report by Salomon and Young. This moderate inflation rate reflects a more stable economic environment compared to the recent past. The Consumer Price Index, CPI, a key measure of inflation, has seen consistent growth, with notable increases in shelter and gasoline prices driving much of the current inflation. Interest rates have also been adjusted to manage inflation. The Federal Reserve has maintained higher interest rates to combat inflation and stabilize the economy. Current savings account interest rates offer returns around 4.75%, which helps protect savings against inflation to some extent. Adapting strategies. Inflation-protected securities. Consider TIPS or Series F1 savings bonds to guard against inflation. Diversified investments. Mix assets like equities, real estate, and commodities. Monitor interest rates. Lock in low rates for loans and mortgages where possible. Maximize savings. Utilize high-interest savings accounts and CDs for better returns. Exploring international opportunities emerging markets. Invest in growing economies like India and Brazil for higher returns. Currency diversification. Protect against domestic inflation by investing in foreign currencies. Global bonds. Diversify with international bonds to hedge against U.S. economic changes, future expectations. Inflation is likely to stay around 3 to 4%. Stay informed on economic reports and Federal Reserve updates to adjust strategies accordingly. In summary, navigating the current economic landscape involves understanding inflation trends, leveraging higher interest rates for savings, and exploring international investment opportunities. Salomon and Young. By adopting these strategies, you can better protect your financial health and take advantage of global economic conditions.